But what I think is going to change over the next several years to decade is gold is going to outpace the cost of mining it. And so the margins are going to explode for these gold mining companies. And what's going to really cause the big gains is that a lot of the gold that the market is assigning no value to is going to suddenly have tremendous value. For instance, if an analyst that works at a Wall Street firm has a long-term forecast and thinks that the price of gold 10 years from now is going to be 1,700, which is what they generally think, because they always think price is going down, but the cost of mining is going to keep going up, you're not going to have a big earnings estimate. But let's say a gold company has a major deposit of gold, but it costs $2,000 an ounce to get it out of the ground. Well, if Wall Street is assigning a $1,700 gold price, then that asset has no value. The mine is, they're never going to extract the gold because they would lose money on every ounce. And so, losing money on every sale may be good business if you're a tech stock and no one gives a damn. But if you're a real business, losses aren't good. But let's say all of a sudden the gold price is 5,000, and maybe the cost goes up from $2,000 an ounce, maybe even to 3,000, right? But if gold can be sold for 5,000 an ounce and it costs you $3,000 to get out of the ground, that's a very valuable asset because the company is going to earn $2,000 for every ounce they mine. And so now something that had no value on the balance sheet could have billions, depending on how much gold they could extract at $2,000 an ounce profit.
Prepare for a financial revelation as Peter Schiff, a luminary in the investment sphere, unveils his bold prophecy for gold prices. With an eagle-eyed assessment of market dynamics, Schiff forecasts an impending surge in gold's worth, poised to reshape investment strategies worldwide. As mining costs spiral upward, gold's value is projected to outstrip extraction expenses, potentially catapulting to an unprecedented $5,000 per ounce. Meanwhile, mining costs linger around the $3,000 mark, painting a picture of staggering profitability for gold mining entities. Schiff's visionary outlook shines a light on the untapped potential within gold investments, presenting investors with an unparalleled opportunity for substantial returns. Don't miss this pivotal moment in financial history.
So I think a lot of these stocks are just going to just explode. And that's why I have such a big percentage of my portfolio. Now, of course, I've been waiting this out for a long time, right? It's not like I just started buying these stocks. I've been buying them for over a decade. And so I've been buying more when the prices were down. And then whenever the prices really rally, I stop buying and I buy other stocks, right? Because I try to keep it at about a 50-50 between precious metals and more traditional dividend-paying value type stocks that have nothing to do with gold and silver. But I think to the extent that you've got your audience and they're risk-seeking and they're gambling on Bitcoin, personally, if you want to gamble, if you want to make the moonshot, right? If you want to buy the Lambo and make 10 times, 20 times, 50 times your money, the odds of doing that in Bitcoin are extremely remote. Whereas the decline, the possibility of a 70, 80, 90% decline in Bitcoin, I think is real, pretty substantial. So I don't see that the risk, that the reward is worth the risk. Whereas with gold mining stocks, can you lose half your money in gold mining stocks? Yes, you could. I think the odds, though, are less that you'll lose half your money in gold stocks than you'll lose half your money in Bitcoin. But on the other hand, I think gold stocks have a much better chance of going 10x, 20x, even 3x than Bitcoin does. So that's where your money should be if you want to gamble. I think my decision not to buy Bitcoin was a prudent decision. Now, with the benefit of hindsight, yes, I would have made a lot more money had I bought Bitcoin 10 years ago. 20, but, had I bought it 3 years ago, I would be worse off. People aren't talking about this, but Bitcoin today is over 20% below where it was 3 years ago, priced in gold. So if you bought gold 3 years ago, you've got more money than if you bought Bitcoin. And with a lot less volatility, too, as a matter of fact. I mean, you didn't have nearly as big a collapse. I mean, somebody who bought Bitcoin 3 years ago might have sold out at a huge loss because there was a big drop, but you didn't have that kind of volatility in gold. And even though Bitcoin right now, you had all these ETFs that came in and all this Bitcoin was bought, Bitcoin is only around 66,000. That's near the highs, but it's still below the 69,000 peak in dollars from 2021. So we haven't been able to blow through the highs despite all this ETF buying. What you have to ask yourself is what's going to happen when the ETF starts selling, because the ETF buying bid it up. Well, it's going to go down even faster when the ETF buyers become sellers. And that is going to happen. The people who bought these ETFs are normal traders who took a shot because of all the hype and all the advertising, all these big discount brokers. Hey, we got these ETFs, we got this stuff, BlackRock, Fidelity, all these guys. And so some people just took a shot. Yeah, let me buy it, right? I mean, just like they buy any kind of hot IPO or something, people get, excited about it. They want to try to make some money. They don't even really understand, what you're talking about, and the reason that you and a lot of your audience is in Bitcoin. This is a whole new audience. Now there could be a few people, that maybe that bought some that were already true believers, but they had an IRA and it was like, all right, I can buy them my IRA now. But most of it is new money. People never bought any Bitcoin in their lives, are just buying it for the first time. So they don't have experience with the boom busts. They just have experience with the stock market. They bought these ETFs. A lot of people who bought the ETFs actually sold the gold ETFs to get the money, or they sold some gold stocks to get in these ETFs. But they're not hodlers. They're not, dime in hands, take my Bitcoin to the grave. I think if they go down 20, 30%, they're out. My point is that I think the whole mania has topped out. And as of now,
we're not going to 100. We're not going to 100, Peter.
Probably not. Probably not. It could happen, but I would say if it was going to go to 100, it would have already gone there. You got to ask yourself, why is Bitcoin almost 30% down priced in gold from where it was at its peak? Why did it lose so much value relative to gold? If it's so much better than gold, if it's the fastest horse in the race, right? Gold 2.0, why is it losing? It's in a bear market. Despite all the hype, all the advertising dollars, all this Wall Street money pushing people in to Bitcoin, it's still in a bear market in terms of gold. Nobody on Wall Street is pushing gold. I mean, it's all crypto. I mean, you go on, look at these financial. We were on Fox Business, or you look at CNBC. They talk crypto nonstop. They barely even mention gold. Yet gold is still beating Bitcoin, over that particular time frame. And I think it's probably going to continue. So I think 2 years from now, gold will be beating Bitcoin for 5 years.
Wow.
And another 5 years, it'll be beating it over 10. But, yes, if you go back 20 years, sure. If you start when Bitcoin was a penny, it'll always be beating gold. I mean, even if in 10 years, Bitcoin is $100, you could still argue that since inception, it beat gold, because gold would have to be up, 1,000 times to, because gold didn't start at a penny. So if you go back long enough, you're always going to see. And I think that the Bitcoin promoters are going to be sticking to this, going back. There's that song, "What Have You Done For Me Lately?" Bitcoin hasn't done much for you lately. Gold didn't work for so long because it has defects. It's worked for thousands of years because it's the best monetary system we've had. And yes, humans have defects. Democracy, by its nature, is a defective form of government. That's why the founding fathers created America to be a republic. And to the extent that we held true to our Republican roots, we were able to preserve a better gold standard than the monetary system we have now. But yes, from time to time, you're going to have, episodes where gold takes a back seat, and you have these experiments in paper money and fiat money and booms and busts. And there's no doubt in my mind that this period will end, and we could return to hopefully a long period of more of a gold standard again that will impose the type of fiscal and monetary discipline that the politicians don't want, but that the people need. You know, you mentioned on Fox Business that Bitcoin was the people's money. Gold and silver, they're the people's money. The people created money. Government didn't say gold and silver is going to be money. The reason governments adopted gold and silver as money is because that's what the people were using. That's what the people wanted. So when the kings wanted to pay their soldiers, they needed to pay the soldiers in money that the soldiers could use to buy food. And, you know, so that was gold and silver. So all they did is they coined it. They took the gold and silver and they made coins out of it. Now, what governments eventually found out is, you know, we could debase the coins.
Yep.
We could take these gold coins and stick some copper in there and nobody will know, right? And then we can create inflation and we can rob people of the value that they think they're getting. And that was kind of the beginning of it.
Right.
It became much easier once they had paper money.
Exactly.
Because initially paper money was backed by gold. And then the politicians realized, hey, we can print a bunch of money and just pretend it's backed by gold, right? But this is not a flaw of gold. This is a flaw of humans. But you don't eliminate that flaw by going to Bitcoin, because Bitcoin is completely flawed from the beginning, because it doesn't have any substance. It doesn't have any value. There's nothing there. It's just a digital string of numbers that has a price. It has a price because people want to buy it. But it doesn't have any underlying value to support that price, other than the belief that the price is going to go up, because more people who don't care it doesn't have any value, or who don't know it doesn't have any value, are going to be willing to buy it. And so you can't base a monetary system on hype.
Thank you for joining us today as we explored Peter Schiff's fascinating insights into the future of gold prices. In summary, Schiff anticipates a seismic shift in the gold market, with prices poised to soar to unprecedented heights. His analysis highlights the crucial interplay between rising mining costs and the potential for gold to outpace these expenses, potentially reaching an astounding $5,000 per ounce. This presents an extraordinary opportunity for investors looking to capitalize on the burgeoning gold market. We trust that today's discussion has provided you with valuable insights into the intricacies of the financial landscape. As we wrap up, we encourage you to engage with us in the comments section below.